Welcome to AI in 8 minutes or less, your daily AI update. Today, we're diving into something that frustrates so many of us in the world of AI investing. You find a brand new, exciting token, but the second you try to trade it, it feels like you're just gambling your money away. We're going to break down exactly why that happens and look at a really interesting potential fix called Subnet 118. So, if you've ever dipped your toes into a new AI project, this probably feels painfully familiar. You spot a token with huge potential, you go to make a trade, but somehow you end up with less than you started with, even if the price didn't really move. So, what's going on? Where's this hidden tax coming from? Well, the truth is, the market for these new AI tokens is an absolute minefield. As Jake Fan, the founder of Investing 88, puts it, it's just a chaotic cycle of pump and dumps. Money is just flying from one project to the next, causing these insane price swings that make it almost impossible for anyone trying to invest for the long haul. And this really gets to the heart of it, right? This is the massive disconnect between what we expect as investors and what actually happens. You think you're going to get a fair price, but nope, you get hit with something called slippage. That's the sneaky difference between the price you clicked and the price you actually paid. It turns what should be investing into this high-stakes player versus player game where it feels like the system itself is rigged against you. Okay, so here's the technical reason why this happens. Most of the time, you're trading against what's called an automated market maker, or an AMM. You can just think of it as a big pot of tokens that helps make trades happen automatically. But the problem is, especially for new projects that don't have a lot of money in that pot, what we call shallow liquidity, you are guaranteed to lose value to slippage. Even a small trade can send the price haywire, taking a chunk out of your investment right off the bat. So, if these automated pools are the bad guy in this story, what's the answer? Well, it's actually pretty straightforward. Find a way to skip the pools altogether and let people trade directly with each other. And that's exactly what Subnet 118 is building with its Hodddle Exchange. It's an automated escrow exchange. You can think of it like a totally secure middleman. You post an order saying, hey, I want to buy this, and the exchange holds onto the assets in a safe little lockbox until it finds someone to take the other side of your trade. It's all peer-to-peer and it's all safe. So here's a quick walkthrough of how it works. You list your order on a public order book for everyone to see. Then, someone called an incentivized market maker comes along and fills that order. And because you're trading directly, you totally bypass that volatile, slippage-filled main pool. And here's a really cool part. If you have a big order, it doesn't have to be filled all at once. Multiple people can chip in over time to fill it, which makes it way more likely your trade will actually go through. And the result of doing it this way? It is absolutely staggering. By avoiding that main pool, traders can save up to 85% of the value they would normally lose to slippage. I mean, think about that. If a trade was going to cost you $100 in slippage, this system puts 85 of those dollars right back in your pocket. That's not just a small tweak, that is a complete game changer. But that leads to a really important question, right? If you're the trader saving all this money, someone has to be on the other side of that deal. So why on earth would anyone volunteer to be an incentivized market maker? What's in it for them? Well, the answer is this really clever system that one of the founders calls a double bubble. And when he says alpha in this quote, he's just talking about the project's unique token. So basically, the market maker gets the token they wanted in the first place, plus they get rewarded with another token on top. It's a genuine win-win situation. Let's break down that double bubble benefit. First, as a market maker, you get to buy the tokens you were already planning on buying, but you get to do it without losing a bunch of money to slippage. So that's win number one. Then, for providing this service to the network, you actually get paid for it. You're rewarded with Subnet 118's own token. So you get the asset you want and you get paid for buying it. Pretty amazing. Now, this isn't just about giving perks to traders. For this whole thing to work long-term, it needs a sustainable business model. It can't just run on good vibes. It needs to actually generate revenue. And the way it makes money is brilliant. The exchange takes a 15% fee, but here's the key. It's not a fee on your trade, it's a fee on the money you saved. So you are always, always better off. The platform literally only makes money when it saves you money. Its success is directly tied to how much value it provides. And that revenue could be pretty significant. If they capture just 10% of the current market, the exchange could bring in 3 to 6 TAO a day. Now, TAO is the main token of the whole Bittensor network. And that revenue isn't just for profit. It's used to buy back Subnet 118's own token, which supports its value and creates this really powerful, self-sustaining economy.
So in the end, this whole project is about something much bigger than just one exchange. The long-term vision here is to build a stronger, more stable foundation for the entire decentralized AI world. By cutting down on volatility and protecting new projects from getting manipulated, the goal is to create a much healthier space for real innovation to happen.
And that really brings us to the big question, doesn't it? As these incredible decentralized AI networks keep growing, the plumbing, the way we trade and value them, becomes absolutely critical. So will platforms like this, platforms that prioritize user savings and direct trading over these chaotic pools, be the key to building stable, long-lasting digital economies for the future? If you enjoyed this, subscribe to AI in 8 minutes and never miss what matters.